All right. So welcome. Now let's get those affirmations. Let's make sure that we're doing that. And I don't know about you, right? I really don't know about you, but what I do know is I feel like a winner. I feel like I'm on top of the world. I feel great when I make that affirmation. I feel awesome, right? I am anointed for wealth. Okay. Do you feel the energy that comes through that? Do you feel the energy that it gives you? So you want to own it, because this is why it's so important for us when we sit down. Okay, it's so important when we sit down that we're walking in that energy, right? It's so important that when we sit down, we're walking in the energy and the understanding that we own what we want to manifest in our lives. And so right now, we're literally talking about us being anointed for wealth. We're on this call because it's really putting us on the other side. We're on this call because it's shifting us. We're on this call because it's giving us a transition. We're on this call because of what it's doing in our lives. And so we want to start with the right mindset, the right thought process, right? We want to start there. I am a BYOB master trader anointed for wealth, right? I'm an educated, because an educated trader is a profitable trader. So I am an educated BYOB master trader anointed for wealth, right? I told you guys we was gonna merge that together, right? All those affirmations. So but we have to own it. I am the signal. I hold my trades in profit. I am 777. All right. So let's see. I have Claremont on the line, Jacksonville, Nashville, North Carolina. Yes, I see Cleveland. I see Minnesota, Bahamas. Good evening, Minnesota, Milwaukee, Toledo, Orlando, Covington, Chattanooga, Jacksonville. Okay, the South coming in. All of Milwaukee and Minnesota. I'm not moving up there, but I see you guys are representing Cleveland, Illinois, Philadelphia, Columbus, Cleveland. Good evening. Yes, I see you, BYOB Worldwide, Chicago, Columbia. Good evening. Good evening, Navari. Good evening, Cali. Good evening, Claremont, Cleveland. I'm saying Claremont again. I'm gonna move you. Chicago. I see London. Good evening. So, ladies and gentlemen, Conway. Good evening, Houston. So drop it in the chat where you're calling in from. And those affirmations. Now I'm gonna go ahead and get my screen share together. And as I do that, excuse me, if this is your first time on the line with us, your first time here, let me get a 111 in the chat. And if you're still learning how to cash out, let me get a 222. 111 and a 222. 111 and a 222. So let me say welcome and welcome back. Welcome and welcome back. So let me see. And now what I'm gonna do is I'm going to explain these calls to you guys. Let me explain this call schedule. Let me explain what we do. Let me explain to you how this goes. So let me officially welcome you to the call. Let me welcome you to BYOB movement, all right? Now, this is what we do, guys, all right? So understand that when we do our calls, where you're here, we're closing out the week strong. And this is BYOB Market Talk. So these calls are about education. Tuesdays are about basics. I'm like backing up. We're going forward. Tuesdays are about basics. Thursdays are about tools training, understanding the tools and how to implement them. Now, Monday through Thursday in the mornings, what we have is what we call our profit calls. And on these profit calls, what we do is show you how to implement what you've been learning. So that's ultimately what we do on those profit calls, okay? Now, let's go ahead and dive in. And I can tell you what we're going to discuss tonight and what we're about to learn. So also understand that as you are diving in here, okay, as you're logging on, keep dropping it in the chat. You want to make sure that you affirm. You want to make sure that you have the right energy. I promise you, it impacts your mindset, all right? I promise you. it's going to impact your mindset, and you want to make sure you're in that right mindset. All right. So let's go ahead, and tonight, what we're going to discuss, right, guys? So what we've been doing, let me tell you what we've been doing so I can tell you what we're going to discuss and why we're going to discuss it tonight. So what we've been doing is we've been doing a lot of analysis, okay? We've been focused on the education, we've been focused on skill set development. Good evening, Callie, good evening. And so understanding that we've been focused on this skill set, understanding that we've been focused on that, what has ultimately happened is we have individuals right now that our accounts have already increased, right? I love getting testimonies, right? I love getting testimonies. So I can tell you I've gotten screenshots, I've gotten text messages, I've gotten telegrams, I've gotten so many messages that are referencing the simple fact that since we've always been educational based, we've always been skill set development based, but we've shifted our focus with a very intentional focus and taken our focus off of you having to walk off the call with, like, oh, I got some trades, right? And it's really about that empowerment and understanding that. And since we've been doing that, not only have people, it's like people who are new, people who are still learning, they've actually been taking the trades, okay? This is why being plugged in is important. And they've been in consistent profit. And then the individuals who have already been trading, their accounts have increased. So I know we said we were doing it this month, but we probably are going to stay here, right? We're probably going to stay here and make this shift permanent the way that we've done it because of the fact of I like the results. An educated trader is a profitable trader, and we've been affirming that, and we shifted to only education-based type style of profit and teaching and everything. And I can tell you the results are phenomenal. And I'm just a little overwhelmed right now, right tonight, because I already knew it was there and I knew what was happening. But to see the consistency of all of you all that are consistently plugged in, to see the consistency of all of you all that are in here is phenomenal. So what we're going to do tonight is we're going to take a top-down approach, okay? We're going to take a top-down approach towards the tools. So what that means is you always hear me talking about when we do this trades, when we talk this strategy, we analyze. Obviously, I'm going to give you that foundation. We're definitely going to start there. But what also happens is we always jump up and analyze. And so I really want you guys to see how it works together, like how it ties together. So when you're trading and you're looking at the charts and you get these alerts, okay, you see these alerts flashing, and we've been on IM.center, and we've been pulling from the harmonics, and we've been tying the tools together. So when we get those things, what ultimately happens, right, is we literally, when we get that, what happens is we literally, it's like, well, how is that applicable? How is that? So tonight, what I want to do is give you that top-down approach. So when we come back and we use these tools and we pull from the harmonic scanner, then guess what? Voila. You get it, you see it, because what you want is a relationship with the market. What you want is when you see this, like when I see the market, I can look at it and I'm like, this is what it's doing. And that's ultimately, what you are. So I don't care your trading style, HFX, right? You're my scalper's heaven, okay? And scalping is in and out of the market. Intraday trading, which is you take a few trades and they're like 10, not 10, but like 30, 50 pips or what have you. Swing trading is when you set it and let it go and just, the trades just ride out. But once you understand this concept, and we're probably going to stay here for a minute, but when you understand this concept, it's really easy to build upon, and we're going to build upon it. So let's get started. So now what I'm looking at, I'm trying to mute when I do that. But now what I'm looking at, so if you hear awkward pauses, because I'm muted so I can cough. So what I'm looking at is this GBPUSD, all right? And I'm going to go over the strategy on GBPUSD, but at the same time, what I'm also going to do is I'm going to talk to you about two different ones, okay? And so I'm telling you what I'm doing, and then we're going to do it, okay? So GBPUSD, the markups are still there, and we've been looking at this pretty much this week. And then Euro NZD, we've been looking at this one pretty much this week, because this one triggered early in the week, all right? And it still hasn't manifested. We've only gone halfway past take profit one, but I want you to understand the big picture, all right? Now, when you get this, when you come back and, like, let's say, where are our trades at? Let me take the pivots out, because I know my 111s are probably on here like, why does that look like a coloring book? So when you look at it, then this makes sense. You see, look, and so initially this morning, remember we started out for a sale. So this will make sense, right? This will definitely make sense. Then, you'll be able to use it. So even if you're in investing, you'll be able to understand it from that perspective when you see something. And yes, I do have up the one from the other day that everybody's like riding a wave, and Facebook is their financial advisor, and we're not going to go there. These will make sense. Remember, we pulled up the harmonics for the crypto, the DCX, and you see now this one is actually starting to play out. So that'll make this make sense. So all these trades that we've looked at, you see this one, depending if you took your take profit up here, you actually hit it. I just didn't adjust this one this morning. So that'll make that make sense. So you see our trades that we took and we analyzed have actually played out. So now let's go ahead and let's talk about it. So if I am a 111, all right, I am brand new to this, okay? I am so new to this, right? Where we begin, okay? Where we begin is here, all right? Where we begin is here. And we start on a 15-minute chart. You notice across here, each one of these time frames. And so we start here on the 15-minute chart. And noticing that when we start here on the 15-minute chart, each candle is 15 minutes. Now, my higher time frame, once again, that's where the market goes, right? That's where, the market moves, right? And so those higher time frames determine the direction. However, when you start learning and you're new to this and you haven't done this before, you have to learn that. So the skill set is always evolving. So the beauty behind it is from my 15-minute chart, no matter who you are, no matter what your trading style is, I can begin to see these trades. When you first log on, this is what you see. You see this chart. You see that this is it. So it's just like, okay, what do I do? Right? That's the ultimate question is now, how do I turn this into money? How do I make this make money? And so when you look at it, you're looking for the BYOB cash out, which has 3 simple indicators, okay? 3 simple indicators. Now, also, guys, while we're going through this, if you have any questions, if you have any comments, if you have a testimony, drop it in the chat. And I see Legendary KJ, I see that comment. I'm not even gonna repeat it because I said, I know exactly what you're talking about. I see it in your affirmations. So I know exactly what you're talking about. But here, we're looking for 3 indicators, right? 15 minutes. So what I'm looking for is my stochastic, right? My stochastic is 1 indicator. My Hikanashi candles, which are the red and green, that's the other indicator. And then you have your PSAR. Now, someone asked this morning, and I'm going to just back up a little bit, and I'm going to kind of show you why the strategy is so accurate. All right. Now, this is a naked chart, right? This is a price action chart. That's a naked chart. Understand across the bottom, okay? Understand across the bottom is my time, and over here is my price. That's what you're seeing right now. Actually, no, it's not a naked chart. Hold on. Now it's a naked chart. So that's a naked chart. That's a 60% accuracy rate, 60, 70%. You have to read the candles. You have to understand. This is why, the education, this is why that foundation, this is why this is so important. And so as I'm looking at that and you're understanding this, now, why is BYOB cash out so accurate? Why is the accuracy there? Well, first and foremost, it's a God brief strategy. So we're always going to have to go back and acknowledge that. But at the same time, is because it focuses and it gives you those areas of value, right? And so what are areas of value? Well, first and foremost, down here, I have my stochastic. In my stochastic, right, my stochastic oscillator. So you'll often hear me refer to this as an oscillator. My stochastic oscillator is a momentum indicator, and is used with like closing price and moving averages. So you'll see individuals marking up charts with moving averages. Well, the stochastic oscillator is calculated off of closing price and moving averages. So it measures my momentum, okay? It measures my momentum. And then these are traditional Japanese candles, right? This is the standard, but the indicator is my Hikanashi candles. So my Hikanashi candles, actually, what my Hikanashi candles give me are a trend. So now this is a trend. And so now look at the smoothness of the candles, okay? I don't have to try to interpret these. I don't have to try to read these. Now, it's good to know how to read them, don't get me wrong, but look at the smoothness. Red is a sell, green is a buy. Red is a sell, green is a buy, right? And it's smooth. So, they do, it's like an interpreter. So now the beauty behind it is, instead of me having to, like, if you were talking to somebody, like when I was deployed, we had interpreters. So I didn't have to attempt to try to learn the language. It was good still to have a little knowledge base, but at the same time, we had interpreters. So our Hikanashi candles interpret for us, right? It interprets for us. So much better love language. Yeah, I like that. It's a love language of the candles. So it basically does the heavy lifting for you, right? And then when I put my dots back on here, my PSAR is what we call a parabolic stop and reversal, okay? It's a parabolic stop and reversal. It is a moving stop loss. It is a trailing stop loss, right? That's what this is. And that's why our stop loss is always above or below the dots. And so this is why those are those three areas of value that we're looking for. Those are those three areas of value. And so now I've gone from 60, 70% to 92% accuracy rate. And so let's talk about how to trade it and how to read it though. So now what I'm looking for is my stochastic. My stochastic is that blue line cross over the red in a downward momentum, the blue line cross over the red in an upward momentum. You notice the momentum is going down, it's going up, it's going down, it's going up, it's going right. Momentum. So the shaded area from the 20 to the 80, my shaded area from the 20 to the 80, this is literally measuring that momentum of the market. Now, this is what we call a leading indicator. So this is leading, these are lagging. So what leading and lagging mean, leading literally means, so for example, leading is going to be based off of your prior habits, right? Based off of what has already transpired, based off of things that you've done in the past that, we attempt to do again. For example, if you have an iPhone, right? So I get up and I go work out every morning, right? In between the calls. So now, because it's become a habit of mine and my phone has enough data on it because it's always with me, now when I get up and I start driving, as soon as I get in a car at that time, if I get in a car at 9 o'clock, it doesn't do that. But if I get in a car at 7, when I get in my car at about 7:15, 7:20, what my phone does is tell me you are 5 minutes from your destination, and it pulls up the map and the route. That's what my stochastic is, right? That's what my stochastic is. It's telling me the route. So if I decide to go somewhere else, my phone's like, hold on, wait a minute, what are you doing? So that's why this is a leading indicator. It's based on my prior habits. It's based on things I've done in the past. It's based on that consistency because I've been getting in the car every morning at 7:15. And so this is calculated, and it's a leading indicator because it's saying based on what you've done previously, based on the market patterns, based on the market history, based on what the market's doing, guess what? This is where my stochastic is going. This is where the market's going. It's going to sell right now. My momentum is in a sell. I don't care what's going on up here. My momentum is in a sell. And so going back to that also, see, I do have to reference that post. So going back to when there is a news announcement, because we always check our news first, but there was an announcement today that made the market drop, right? There was an announcement today that made this happen. right? There was an announcement, and I'm on the wrong, well, all of them really, but there was an announcement today that made this happen, right? And so the comment, of course, is even when the POTUS speaks and turns my trade another direction, I am still a master trader. So even when that happens, this happens, right? So this is why, so that's like my phone looking at me and saying, hold on, wait a minute, what's going on? Because this is where you're supposed to go at this time. So that's my leading indicator, right? So now my other two are lagging indicators. These are lagging. So that means that these don't get in alignment until I get in the car and actually start driving and make that right turn out of my neighborhood. That is when, the market gets in alignment, right? So that's when these, because they're lagging, which means I have to physically do something in order for it to follow the direction. So this one is saying, look, based on what you've been doing, this is where we're going. My lagging is saying, okay, so now you started going, you put your blinker on, so now we're gonna roll with you, right? So leading, lagging. Now, so my leading indicator, that's why I said, we look at this chart, we get on here and we look at this chart, we get on here and we see this chart, and it's like, okay, what now? So now it's say, okay, let me look down here and let me look at my lagging indicator. I can't use current time right now because guess what? The market, this is consolidated. So we're not gonna focus on this. That's why we're looking right now at this far back in the past, because I want you all to see it. So here, blue line cross over the red and a downward momentum around the 80, I'm here for a sale, right? That's where I'm at. Now, here, red candle flat top, piece R flip to the top, okay? Red candle flat top, piece R flip to the top. That's my BYOB cash out. That's it. That's the BYOB cash out strategy. So now I need time frame confluence. Do not take your trade without time frame confluence. After today, you'll understand why. All right. Don't take your trade. Now, is it possible that you can still cash out? Absolutely. But one thing I do know is you have what's called a pip reaction time. How long does it take you to get in the market? Guess what, guys? You have to push the button. You have to push the button. You have to push the button. So the only way you're going to know is if you push the button. And remember, it's the broker's money. So it's okay to push the button if you are, it's really okay to push the button. I just want you to know it's okay to push the button. So now, as I'm looking at this, okay, and as I see this, now what I'm seeing is blue line cross over the red and a downward momentum, red candle flat top, piece R flip. I'm going to put an arrow here. Now, for my 111s, right? This could be day one or day one of trading, day one to BYOB, month two to BYOB, and even if you're still learning, whatever the case may be. If you are new, this is where you trade. If you're still learning, right? So this one is close enough to the 80. I can go with this one. So now this one is a little further away. This one's halfway. So this is where you won't touch the trade. Your skill set advancement will allow. So I'm speaking to both of you all right now. I'm speaking to my 111s, my 222s, and my 333s. You see, I never ask you to drop anything if you're a 333 because we're going to flood the chat because I know so many of you are in profit. So now here we go, right? So now this one is a setup. This one, blue line cross over the red around that 80, red candle flat top, piece R flip to the top. So now this one, I'll show you why it's a setup when we get to the higher time frame. But I'm trying to separate your skill set level intentionally, right? Intentionally. Now, as I come up here to the top, right? I come up here. What we're seeing is what has to happen is I need to be in some sort of sell momentum. It needs to look like it's setting up for a sell. So we'll analyze this, okay? I'm going to push this over because I want you to see what's being done. So right now, my stochastic is still in a buy, right? Right now, my stochastic is still in a buy, okay? It's still in a buy. So my candle is still in a buy. I do not have confluence, all right? I do not have confluence. So I don't care if this thing rolls for, if it goes for 100 pips, right? I do not have confluence. How you do one thing is how you do everything. Skill set development, how you practice is how you play. Because it works out this time doesn't mean it's going to work out next time. So you want perfect practice makes perfect. So I will not take this trade, okay? Yes, GBP can sometimes, yes, GBP, because of the amount of liquidity in British pound, that you can drop down to the 30, but only if something is allowing you and something's setting up. Only if something is giving you indication that it's setting up. Only, right? So this is not. So I'm not touching it. This now, my stochastic began its sell momentum. It began its downward momentum right here. So here, okay, here, and when I look here at this one, I have, this is beautiful. I don't have a piece, or actually, do we have a piece art? We actually do have a piece art. So this is like beautiful, right? So my stochastic is in my oscillator, my stochastic is in a downward momentum, my leading indicator. And then here, my red candles in the sell, and also, right? So even for the other one, you notice that the one I marked up here, this one is still in that sell. So for those of you all like, so this one, right? So this person would be able to take a trade. We still need to check our 5 minute. We'll go do that in a minute. Now this one, all right, this one, you notice we're still in the sale and my momentum is still in the sale. So this is the time that for those with the advanced skill set, and you're welcome about the always addressing it. This is when you all will be able to come back and say, you know what I need to do is I'm looking for an entry point, right? So you already know how to trade on a higher time frame and you're looking for an entry point. So I need some clarity on that question. Are we only looking for one flat candle with a piece art? So now this is what I do want to emphasize. All right, because I get those types of questions all the time. We have a tendency to add to what I say. I want you to think about what I said. We have a tendency to add to what I say, and we start asking questions. I said I need a blue line cross over the red and a downward momentum. I need a red candle with a flat top and a piece art flip to the top. Now, I know different styles of trading require different things. Different strategies do different things. But I want you to think about what I said. Did I say candle number 3? Did I say don't worry about the PSR? And I'm saying this because this is all the time. And if somebody's asking a question, I mean, somebody else is thinking the question. And so I want you to think about what I said. I said blue line cross over the red and a downward momentum, red candle with a flat top, PSR flip to the top. That's when it happens. I do my time frame confluence, and if I have my time frame confluence along with that trade, then I can take that trade. All right. So now this is that. So this one. So for those of you all with the more advanced skill set, right? Those of you all with that advanced skill set. Oh, so I just answered all your questions. So with that advanced skill set, you know, as far as it means you've been doing this a little bit longer and you're starting to see the charts a little bit clearer, you're looking for an entry point. So when you drop down, that's that person that would take this one, because that next question is, but it's not at the 80. Well, I'm telling you why it doesn't have to be at the 80, because you're analyzing from the higher time frame. So now we just talk to everybody and then drop down to the 5 minute. And when I drop down to the 5 minute, right, it just needs to still be selling. My 5 minute technically can be my tighter entry point. So that's the BYOB cash out strategy with time frame confluence. What happens now? If you have not gotten to where you've mastered those support and resistance lines, right? If you have not gotten there, you market execution, 10 pips and cash out, market execution, 10 pips and cash out, and or trade to your first support and resistance line. Hear me clearly. I know we've trained on buy stops, sell stops, which means you can set it. If you don't grasp this yet, then you don't set that yet. You have to know where the market's going and what the market's doing in order to be able to set those things, okay? You have to know that, okay? So I don't want you guys just playing around with it. We're gonna do everything in excellence, okay? So you want some knowledge base in order for you to be able to do that, all right? So let's come over here. So what I'm gonna do is we're gonna compare this. I don't wanna, oh, absolutely, set a stop loss. Oh my gosh, absolutely. I'm gonna go back for that one. So a stop loss is always above or below the PSR. A stop loss is exactly what it is, stops the loss. So just think about it. We focus with positive energy. We manifest with positive energy. we think with positive energy, right? That's how we operate. We always want to make sure we're in a positive energy flow, because our energy flow is what attracts what we have to us. So you never hear me get on this call saying, well, you know, that 8%, right? You never hear me get on this call saying, well, you know, we have this 8%, you know, that block, you know, X, Y, and Z. So all of that being said, right? All of that being said, it's just like, what we want to do is focus on the positive, but we still have to have the proper practices in place so we don't operate in the negative, because what happens is you start spazzing out and it starts shifting your energy. So your stop loss is always, it's never on the PSAR, but it's above the PSAR. So if I'm selling, because we're selling the market, my stop loss is always above. So in this situation, my stop loss would have been up here somewhere, right? Your stop loss is always above, never on, because it's a trailing stop loss that moves with the market. And we don't put our and it's like a trailing support and resistance line. It's what you call a dynamic support and resistance. So you don't put your stop loss on the support and resistance, right? We don't do that. So absolutely 100%, because what can happen, like, let's look at this one for a minute. I'm gonna change it to GBP all right, because I want to discuss it, and we're going to discuss it. But if I start from here, you guys will be looking at it like, oh my gosh, that's marked up, and I don't understand it. And so we're gonna shift that energy. We're gonna start from here. So this one was actually on a harmonic scanner, right? And I'm not gonna remark up or take profits, because I'm gonna flip back to there, but I want you to start from this scratch, right? So notice that in this momentum, speaking of stop loss still, this was in a downward trend, right? You see we're in a bearish market. So this is a correction. So look at how far this correction is, right? Look at how far it is. So let's say you took the trade and it's in that 8%. That's a 65 pip correction. Do we want to be in that? Do we want to be in a 65 pip correction? Absolutely not. So notice that. Let's understand where the market is first. So I want to look at the big picture of the market. All right. So knowing that I want to look at the big picture of the market, I'm going to come here to my hour. All right. So obviously now we're going to take this a little bit further, a little bit advanced. And it's going to make you understand why my chart look like this, right? You're going to be like, oh, I get it now. Now I see why her chart looked like that. So now, all right. So looking at this, okay, what you're seeing, we see, let me move this. Let's look at a little price action right quick. So what you're seeing is, if I come up here to the daily, right? So the higher time frame you go, the more you understand where the market is. Look how nice and smooth the market looks right now. You can kind of see this is back to the 20, this is back to 19, back over here, right? So obviously we have some significant support and resistance lines in there, right? But what do I see right here? The market was in a bearish trend, and now that's a bullish trend. So the market was buying right here. So if I'm looking at this, right, on my daily chart, where's my market going? And so we're drilling downward to the everyday trades that we take, right? Those everyday trades that we take. Because when I'm taking my everyday trades, I'm not trading on a daily time frame, right? I'm definitely not on that daily time frame taking trades, right? We're not there. But where we are, I kind of want to do this. But where we are is on that lower time frame, right? And so you see how I'm moving this around. I'm doing that on purpose, because some of you guys get caught on it trying to make it so perfect. You know, it's no such thing as a definitive line in the market. So if you put yours here, if you put yours down here a little bit, however you put it, some of you guys might respect those wicks, you know, but it's just for you to have that understanding of where this is at in the flow of the market. And so now you can see that since December, this market has overall been in an uptrend. It's overall been in a buy. So now what I want to do is I'm going to come here and I'm going to clone it, because I want my thing exactly the same. So now this is what we call a channel. So the market has been in an upward trend. So some people you'll just see like have their trend lines. But now what I'm doing is I'm dropping this line on here, because now it's giving me a channel. Okay. So now I can see that the market has been up. Now, once again, GBP is a little disrespectful. You know, If this was an AUD pair, it'll probably be nice and inside of the lines, right? You know, GBP is that child because it moves so much, it has so liquidity. When it's coloring, you know, that child that color all outside the lines, you know, it's still the picture, but they disrespect the little black line around the crayons. So it's all around there just a little bit. That's what GBP is. So you can see it's going to disrespect it just a little bit. But so, and I'm telling you that because when it gets outside of here, I don't need you thinking that, oh, it broke it, so we're gone. We're shifting now, right? So just know that it disrespects it a little bit. So now when we come here and you can see where we are, okay, I drop down to my 4 hour, but what else do I see? What I see is I see another trend, right? I can have trends inside of trends. So the overall market was in a bearish market, but you know, since December, but in that bearish market, I'm down here. And I'm actually move this just a little bit because, you know, obviously you start seeing a little bit more. You see, I told you I'm doing this on purpose because I want you guys to see that you can make adjustments as you need to. Make the adjustments. Don't spaz out. Make the adjustments, okay? So doesn't this look a little clear? Let me get a 555 in the chat if we're a little bit clear. 555. So now you understand when I say the bigger time frames, the higher time frames tell me where the market's going. My lower time frames, right? My lower time frames don't tell me what the market's doing. My lower time frames is the activity that's happening inside of this. So my overall momentum is here. My overall momentum right here is in a sell. On my daily, it's in a buy, but on my lower time frame, it's, you know, the lower I go. So now I have to respect where I'm at right now. Okay, I'm in a sell. You say, every time I listen to you, I have a better understanding of the market. Well, I'm so excited to hear that. So now I'm so glad. So now every time I want your account to reflect it too. So now, as you see, and now as I drop down some more, what do I see? Right? When I drop down a little bit more, I'm on the hour. Now look, on the hour, I can draw another trend line in here, right? So I get structure inside structure, inside structure, inside structure, but it doesn't negate the big picture. So going back to the other, if I don't put a stop loss, just imagine if I didn't graph this and I didn't put a stop loss, then where is my trade going? You do not ever want to be 200 pips, 300 pips. That's 300 pips. Do you want to be so imagine had you said, oh, it's still going to sell because of where we are right here. It's still going to sell. It's still going to sell, right? Imagine how we said that and we didn't put a stop loss. I'll be 300 pips in a hole. I'm not trying to do that. I have other things to do in my life. I'm going to take my L and move on because it's not about that one loss. And I don't need you getting caught on that 8%. Because if you have perfect, practice makes perfect. And if you're operating in consistency and you're operating with that, then that won't even phase you. I can tell you if you have attached your account to that online trade journal and you're actually monitoring your trade account, your overall profit at the end of the month, at the end of the week, because the one we did allows you to set goals, right? The one we did allows you to set weekly goals, daily goals, things of that nature. So when you set those goals, then when you hit them, guess what? I'm not concerned about that one loss I took. You know, I'm really not concerned about that. So that's why we always stay in that positive energy flow. That's why we always stay focused on our objective. My objective is what are we going to be by the end of the year? What are we going to have in our trade accounts? Because what are we beginning next month? Next month is $50, $100 days, right? So what does that mean? That means that by the end of the year, what are we going to be? Because it's going to continue to increase, right? Right? What is it? Exactly. 7 figures. So we're going to withdraw 7 figures from this market. We're going to withdraw 7 figures from here. So you're going to be able to cash out anytime you want anything. You're going to be able to just go in the market and cash out. And that's ultimately what's going to happen. And so now, as you look at this, okay, as you see this, right? You look at this, right? And you can see that there's a trend inside of a trend. But what I'm trying to get you to see right now, so that's that big picture, okay? This is that big picture. And as I see that, now what's happening is these two are meeting. So let's go back up a little bit. I want you guys to see it. So now what you're seeing is these two are meeting. So this is upward trend. We had a trend here, right? And now let me come here because, right, let me come here because I want to show you now on my daily, I'm just trying to give you some big picture, right? Because what's ultimately happening, I'm like, why does that look like that? I've clicked the wrong thing. I know you guys are like, wait, she didn't talk about that. What is that? Right? So here, this is why some people use trend lines, some people don't. I love them, right? I love them. They help you see the market. So now where are we at? We're at that intersection. So you can see what's actually happening in the market. Oh, you love them too. So everybody has something they love, you know? So, and so now you can see where we are in the market. And so we're coming up into this channel. And as we're closing out in this channel, right up in here, you can see it's definitely respecting this area. So now when I come back over here, this doesn't look crowded, does it? It doesn't look crowded. So now this doesn't look crazy, you know? I'm gonna put the pivots on there in just a minute, I promise. So now it doesn't look crazy. So what we know about GBP NZD is it's been in a buy. And what we know is that this part has been in a sell. We know we're in an upward channel, but I'm in a sell right here. And so now look at how, right? So normally when you just look at the chart without this analyzation, what you're saying is, oh, it has some consolidation to it. But now you know why it's consolidated. We know what we're doing and we know why we're doing it. We know what we're doing it and we know why we're doing it. We know what we've done and we know why it's doing it, right? Makes a lot more sense. So now you can see this. So that's the same currency pair. So now what I'm looking at is I had this blue line, I have this blue line, I have this blue line, right? This is that harmonic pattern that was identified, okay? This is the harmonic pattern that was identified. And so now you can see that this is bouncing off of here. We had hit that take profit one, but you know how sometimes I'm like, you got to look at the big picture. Just know if we're going to hit take profit two and take profit three, we have to look at that big picture. So if we would have looked at the big picture and noticed that once you get those two touches, I have one touch, I have two touch, I have three touches, right? Once you get those touches, right? I have those touches. So what does that mean, right? When I draw my line, so when I get down here, my take profit was up here. Let's make it thicker because I want you to see it. My third take profit was up here. But is there a reality right now that I'm gonna hit past take profit one? I'm gonna go to take profit two. This was our take profit one. So anybody tell me what should our take profit should have been at that time? Anybody drop it in the chat. What was our goal for this trade? I know it's a delay on the chat, so I'm gonna wait. What was our goal? This is exactly. I told you guys it's a delay, and it's like all of the chats come in all the way at the same time. So knowing that, we didn't get caught in a pullback. And so we wait for it to break this because it's still identified. So now we wait for it to break it, and then we can go to take profit two and take profit three. And so by the time that all this is done, from where we got in the trade down here, because we took this, and this was, I mean, that's 180 pips. We took this. Well, I know I took it. Hopefully you all took it too. But we took it. And so by the time it's done, look at how many pips you have the opportunity to take and participate in. 519. Okay, so over 500 pips. So it just depends on when you get in and when you get. So when this breaks this, and then when I drop down a little bit, you can see the movement and the momentum. So now I'm in here. So now you have an opportunity if you're trading on my 15-minute chart. Now you see multiple opportunities. So it's not that, I want you to see this. So it's not that we were just setting a trade and just letting it run, right? It's not that. But what it is that now we know this is our zones. So this is a zone. I have to respect this zone, and I need to respect this zone. All right. I need to respect this zone, and I need to respect that zone. So now that I know that I'm respecting those zones, now that I also have another trend, you know, I'm here, it's respecting these zones. And now you know why it's kind of folding in a little bit as it starts closing in, because it's closing out in those zones. But now I know where I take my profit. Now I know my movement. Now I know what I'm looking for. So before we get out of here, the market's going to have to break out of here, or the market's going to break down this way. But based on I didn't mean to do that. But based on a harmonic pattern, right? Based on, actually, we don't need this one. Based on a harmonic pattern, it's still on a harmonic scanner for a buy. So when we go pull those trades, I still need to do the top analysis, top down analysis, and draw it down, right? I have to do that top down analysis. Same thing with GBPUSD, right? Let's come over here. And I just wanted to talk about two of them that we've done. See what I mean about when it breaks out of that channel? So this one was actually in a channel for a long time. So this channel started back here in September. So since September, we've been in this upward channel. Looks like that looks like some choppy rising, you know, since it's been rising. It looks a little choppy. But now we broke out of this channel, and now we're technically in what we call a range. All right. So when you guys were asking the other day about a range, now we know this is what a range is. So now we're in a range. We broke out of, right? We broke out of our upward momentum, and now we're in this range because we broke out of that upward trend, and now we're in a range. So now when we're trading this one, okay, I know I have my boundaries. I have my boundaries. My higher time frame gave me my boundaries. Goes up, goes down, goes sideways. Exactly. That's all the market does. The market goes up, the market goes down, the market goes sideways, right? So that's what it does. And so now as I sit here and I look, I have my boundaries because I'm in this range. And so when and even in this range, okay, even in this range, what do I have? What do I have? Market structure, market patterns. So when this triggered for our take profits, so we went to the harmonic scanner, we identified a trade to analyze, we know where the market is, we pull it back, we bring it back. And when we bring it back, you know, when we bring it back, we're in this zone, we're in this pattern. So now we know if that's a valid trade. Do I want take profit 1, take profit 2, and take profit 3? So now I know. And then when I come here and I get these triggers, because sometimes we talk about them being extremely overbought or oversold. There was one for GBPUSD not too long ago. And that's why I picked this one because it was in the range. So, and it literally was not that long ago. But these euros are triggering now. So GBP-AUD triggered, GBP-AUD CAD. Where did it go? I saw it right before the call. I promise I did. So for the sake of time, let's just pretend like I'm gonna just put this on here because I saw it. I promise I saw it. So let's just put this on here, okay? So let me delete these take profits from the harmonic scan. I'm gonna just delete them. But let's focus on the trigger on this one. So the trigger was for a sell, and it was also on a 5-minute. So now, why are most triggers called on a 5-minute? Most triggers are called on the 5-minute. You know, most triggers are called on a 5-minute because of the simple fact that that's where all the activity happens. So just to bring a little bit more clarity, okay? Just to bring a little bit more clarity. Here I am. Okay, here I am. This is a daily candle. So I'm going to use yesterday's daily candle because this one started at 5 p.m. Eastern Standard Time, where we are. So I'm going to use that one. So when I come down to my 4-hour, maybe in a minute I will. All right, so my 4-hour, these are all the candles on the 4-hour that happen in that daily. On my 1-hour, and be like, da-da-dee, da-da-dum. Come on. Switch over. So on my 1 hour, these are all of the candles that happen. But you notice we're still, even though we now see green, what are we typically at? We are now still in a downward momentum. So we know we still are going to sell. Overall, even though we'll get corrections and pullbacks, we're still going to sell. So now my 30-minute and my daily, these are all the candles that happen in my 30-minute. And you see, even though we had some that rose up in a buy, where we ultimately at in the sell. Same thing. Now, these are all the candles that happen in 15 minutes. Even though we get buys in here, even though we get buys, corrections. Look, this was a nice one right here. Look at that. That's 40 pips. You guys make money on that. So, but you understand overall where the market is. And so now when I'm down here and I have a trigger on my 5-minute, I have a trigger here on my 5-minute. Look at all of this. Look at all of this activity and this movement. Is this really going to tell me what's happening and where the market's going? Is this going to dictate and tell me anything? Can my 5-minute tell me anything? So now do you understand why I say it's a tighter entry? Now do you understand why I say the 5-minute is a tighter entry? Because if I know of whether I was on my daily or my 4 hour, so even if I would have picked one of these 4-hour candles instead of the daily, by the time I get down here to my 5-minute, okay, when I get down here to my 5-minute, you know, this is an entry point. So when I have a 5-minute trigger, if I do a top-down analysis, so normally we always put our entry trigger on here. And that's why I was looking for that one, because I know I saw it. I was on my laptop though. I don't know why it does that to me sometimes. But, you know, when I'm looking at that and you know that triggers and it's for a sale, one, it's always caught in a correction. So that gives you time to analyze it. So being caught in a correction means it's setting up. It's not ready for you to push the button yet. That means it's set up. So I'll get a trigger here. Then after I get the trigger, I turn around. Is after the correction happens, then I check my 30 for my confluence. Obviously, this one I do not have confluence for a sale right here because this is buying. But I look at my higher time frame. What is it doing? Now, are we even gonna have a trade as this call close out? Look at this. Look at how it's bouncing off of here. So look at the fact that it's rejecting here on the 4 hours, heavy rejection. We're starting to get confluence. My hour has a stochastic up, a green candle on a PSR flip. Look at the momentum. Now this is overbought. That might be why it's triggered for a sell, because it's always caught in a correction and we're definitely at that overbought territory. So we'll stay here for a minute, but ultimately, where do you guys think we're ultimately gonna go here soon? Just kind of looking at this and what we just talked about. As we close out, let me see, did you guys learn anything? Where are we going? Put it in the chat. And if everybody type at once, I can't hear anybody. Everybody speak at once, I can't hear. Okay, there we go. There we go. I tell you, it's like nothing comes in and then all of the chats just flood in all at one time. All right. So you guys are paying attention. All right. So now this is that I just wanted to give you guys a top-down analysis, you know. So you say outstanding, got to practice the harmonics and add the trend lines. Absolutely. Now you should understand why this is our homework. Now you should understand why I feel that this is a great combination, you know, with this, and it will really help you see the market. So where you begin, obviously, is in the academy, understanding the foundation and the basics, right? Obviously, that's where it starts for you, and that's where it begins. And then you do your analysis, and then, you know, you do your analysis, and you do all of that, and then, you know, you just kind of keep going. What time of the day is the best time to get on a harmonics? It doesn't matter. So, because what it is as soon as the harmonic pattern is identified, let me see something really quickly. Whenever a harmonic pattern is identified, right? Whenever a harmonic pattern is identified, what ultimately happens is you get to analyze it, okay? So let's see. Strategies right here. Harmonics. Now let me ask you this as I pull this up. let me ask you this. Now, do you guys understand why I pull from the hour and not the 15? Does it make sense now? Does it have clarity? All right, awesome. So here, when I come in here, all right, and I'm looking at here, what you notice is they have multiple brokers. So you can just pick whatever broker you want. So it's really not a time of the day. Remember, the market is 24/7. I mean, 24/5. Crypto is 7. So as I'm looking, I could pick AUD/JPY. Actually, let's pull the Gbpusd. Haha, look at what we just did. This one is brand new. Look what we just did. And you guys called it. You see, what does it say? We're looking for what? A buy. And you all just called it. So now you understand that top-down analysis. So when I come here, I grab this tool. So now this is our homework. I'm gonna tell you homework because I come here and I grab this tool. I do my top-down analysis. I bring that and it really helps me. It brings that to me. So first thing first, to learn supportive, there is 2 phases to this. This is why you're dropping that homework. And some of you guys have slacked off. We're supposed to do 1 a day. 1 a day, drop it in a Telegram. 1 a day, drop it in a Telegram. 1 a day, drop it in a Telegram. And it's not to just mark the charts and walk away from it unless you're learning support and resistance. If you're learning support and resistance, that is what this is. This is a support and resistance line. This is one, this is one, this is one, this is one, this is one. Yes, this is info for the 111s. So let me explain to you why, because I'm gonna address that and then I'm gonna finish. It is, this could be the day you enroll. This is still info for you. I can guarantee you, if you are plugged in, all right, it's going to shorten your learning curve. Have you ever gone to school, and when you're in school and you're learning something and you read the book, and then when you go start practicing, you have to go back and reference the book because you don't remember? Because you're reading, you're learning, but it's not applicable because you're not applying it. So while you're on this call and you're in the academy, then it's gonna make it make sense because you're going to remember the charts. You're going to see what's transpiring. You're gonna see what's happening. So as you begin to push the buttons, but this is also why we break the calls down the way that we do. On Tuesday, it is a basics where we're strictly strategy based. I'll do other things if, right? I'll do other things if, we get that. So this is definitely for everybody, especially the 111s, right? Especially them. So here we are, right? This is that. So what you need to be doing first is identifying your support and resistance lines. And then second, what you need to be doing is now taking this, right? Taking this and looking at it, analyzing, top-down analysis, and flow through it, okay? That's what you need to be doing. Okay? So that should bring some clarity to that. So that should definitely bring some clarity to that. And then when you come over here, because we already analyzed it, you can see, yes, it is a very, very beautiful trade. So you can see where this is going. So that's what we did tonight, right? So that's what we did tonight. And so this brought a lot of clarity. This brought a lot of, helping you guys understand it. And that's ultimately, what is going to transition. And, so you now have a beautiful trade set up. We did the top-down analysis. You understand we're in there. You want to respect those zones. You go in there, you set your take profit, you make sure they line up, you analyze it, and you can take a trade, okay? And so it's just going to bring clarity and it's going to make it make sense.